Yesterday's price action on the S&P was the best first day of the Santa Claus rally, which typically takes place in the last 5 trading days of the year, first 2 of January, since 2000. It appears, as we have the opening bell right now, that we could have another up day, although given the volatility these days, Carl, you just never know.
It's very true. Yeah, and given the volume of this classic week between Christmas and New Year's. But there is the opening bell and the CNBC real-time exchange. On the big board, it is BlackRock in celebration of its iShares ETF at the Nasdaq, members of the Bowery mission providing meals and shelter to the homeless in New York City. One other note about Apple, guys, is the fact that they are closing 12 of their New York City stores. It's interesting, Scott. You know, we've tended to look at a few specific corporates as sort of bellwethers as to how industry is dealing with COVID restrictions. Apple was a big one. I remember the day in March of 2020 when they closed stores. So doing it again on a temporary basis because of the Omicron spread. The other, of course, is Goldman requiring boosters, which I know Joe talked to Scaramucci and Mick Mulvaney about in the last hour, beginning in February. And, of course, Goldman has required vaccines for all of their staff, really going back to August. But the banks are having to wrestle with this, maybe more than every industry other than, say, logistics and freight.
Yeah, and I'm also thinking about those new rules, if you want to call them rules, from the CDC and how it's going to impact, you know, jobs in New York City. Since we're talking about a lot of the banks, you have the booster requirements in New York City, as you said, Carl, with Goldman Sachs and some of the other institutions. I'm also thinking about, you know, the NBA and the NFL and how these new regulations are a real gift, is the commentary that I've read this morning to some of those businesses that have just been hit so hard by Omicron and COVID. You just look at the football game that was on TV last night, Miami and the Saints, and you had the Saints with 20-some-odd players on the COVID list. So you're getting right to the heart and the meat, if you will, of the money time in those sports. You're approaching the playoffs, not only from a rating standpoint, but from playoff bonuses and things like that. All of it matters. Right now, the commentary, for the most part, is positive. It's why Tom Lee talks about there's a lot more fuel left to the rally. If the Santa Claus rally started yesterday, we'll see how long it can go. But look, even he talks about what the other side of everything is going to bring. He told us yesterday it's not going to be so easy. Let's listen.
I think 2022 is really treacherous. So if we are at 5,000 in January, we could be down by June from there. But I do think for the full year next year, it's a double-digit year, partly because, you know, we're still in a solid expansion. Monetary tightening doesn't kill bull markets, but it creates a lot of volatility in front of it. So I think if the Fed liftoff is in the summer, by December, the markets can look a little bit past that. And so I think we're still up 10% for the year.
So, Carl, I think most people would take a 10% gain in the S&P 500 as pretty good, albeit not as great as we've had this year. You know, you get a little spoiled when the spigot is wide open and the liquidity just flows and pushes the markets to record highs almost every day, you know, with some peaks and valleys and things like that. But then it starts to get real next year. You're going to start talking much more about the Fed and the change of policy.